And we are privileged to have with us the Governor of the Banque de France, Christian Noyer, who is going to present his views. As you have seen, we alternate between policy sessions and more research paper presentation sessions. And I think that's appropriate that your remarks come after the session we've had. That's appropriate not only because of the wealth of your experience and what you're going to be able to tell us. You were director of the French Treasury back in 1993. At the time, we were going through different types of and more regional type of crisis. And you were the first Vice President of the ECB, so you were very much present at the creation of the euro, so you are absolutely qualified for making the remarks you're going to make, but also for another reason, which is that if we look back at the motivations different countries had to promote the euro and to participate in the euro, I think France is special for having put emphasis for a very long time on the international dimension, on the global dimension of the euro and its potential as a global currency. For many other participants in the euro, this was really a second-order issue. Mostly the concern was about the implication for their own management, for their own macro management, for the micro benefits of participating in the euro, for the gaining credibility. For France, it was always, this dimension was always very present. And so I think that to give you the possibility of giving us your thoughts and coming right after the session in which we ask ourselves what's the potential and what are the obstacles of a global role of the euro is very appropriate. Please, if you could take the floor.
Well, thank you very much indeed. I must say it's a great pleasure to be here today with so many friends and colleagues in the room to celebrate 10 years of the euro, as you just said, as a global currency. I think this is quite important. Although I must confess this is not exactly my idea of a quiet and peaceful anniversary. When I was privileged to be designated as the ECB's first vice president, I would certainly never have imagined that I would be sitting now as a member of the Governing Council dealing with the worst financial crisis in the last 80 years. Actually, one of the main gratifications of the job during the crisis has been really, I speak under the control of Erki, the quality of our collective interaction and deliberation in the Governing Council, based on our willingness in very challenging circumstances to share judgments, exchange views in a spirit of friendship and mutual respect. And I must say I'm very proud to be part of this group. Together we've been able, I think, to make quick decisions and adjust flexibly to fast-changing environment without ever giving up on our mandate and on our mission. Obviously, the euro area, like the rest of the industrialized world, is going through a very rough patch. We can only imagine what could have been the situation if we still had 15 different currencies with so many bilateral exchange rates, potentially as volatile as other asset prices currently are. That single thought experiment is enough, I believe, to show how much Europe benefits from having a single, truly global currency. Well, 2 days ago, we took two very important decisions. First, in an unprecedented move concerted with all major central banks, we decreased our policy rate by 50 basis points. And then, in a separate deliberation a few hours later, we further adjusted our liquidity provision framework. I will spare you the technicalities. Suffice it to say that as a result, banks will have regular access against collateral to unlimited amount of liquidity at the policy rates, i.e. 3.75%, and this at least until the end of January 2009. Let me briefly comment on these two decisions. First, the liquidity provision. Since the crisis broke out, central banks have tried and restored an orderly functioning of money markets, even when modalities were different. There has been a convergence in objectives and in frameworks. Central banks have stepped up the supply of funds at longer maturities. Some have broadened the range of collateral accepted in their secured lending operations. They expanded the scope of eligible counterparties so as to ensure a wider dissemination of funds. Importantly, major central banks conducted coordinated actions to provide longer-term funds to address dollar funding needs of non-US banks, thereby ensuring an adequate distribution of liquidity across borders. Yet, after more than a year of crisis, credit markets remain fragile, normal interbank relationships have not been reestablished, and those frictions could destabilize the financing of the corporate sector, thus further threatening economic growth. With our last decision, we have given financial intermediaries full assurance that their liquidity needs will be met in an environment of total clarity and absolute predictability. We hope that this will contribute to reduce uncertainty and restore confidence between counterparties, which is, of course, a prerequisite to a functional money market. This may depend on more than simple liquidity provision, but central banks' ability and willingness to use their capacity as a major source of stability in the financial system should be seen as such, both by market participants and the general public. Second, on monetary policy. We have participated in a concerted action by major central banks. This is a major and unprecedented move to restore confidence, but one I want to emphasize fully and absolutely consistent with our mandate. It is obvious to all observers that the overall environment has dramatically changed in the last 3 weeks. Declining oil and commodity prices, together with stagnant activity, has significantly altered the inflation outlook. Based on current conditions, we can expect instant inflation rate to come under our definition of price stability somewhere probably in the middle of 2009. In addition, long-term inflation expectations, as measured, for instance, by the 5 years and 5 years break-even or swap inflation rate, has dropped significantly under 2%, perhaps reflecting the credibility created by our past actions. To be sure, we must remain vigilant as regards wage developments and the still possible second-round effects from past price surges. But overall, I would assess that our new monetary stance is in line with what is necessary in current conditions to fulfill our mandate. Let me now elaborate shortly on two other sets of policies which, although not directly linked to the currency, contribute to underpin the strength and stability of the euro area. The crisis has given a new impetus to discussions on the proper architecture of financial supervision, and indeed the previous discussion was showing that very lively. In Europe, with market integration moving at a quick pace, supervisory structures will have to adapt. I'm a strong supporter of the lump fallacy process and believe that current efforts to improve and develop it deserve all our attention. But I would also argue that the process must be conducted with pragmatism and a constant look at reality, rather than by reference at some theoretical scheme and vision. And I would like to take this opportunity to mention two lessons that I draw personally from events of the last 12 months. First, there are clear advantages in having banking supervision close to, at least not too far away, it's possible close to the central bank. I think this is now a conclusion shared by all central bankers in the world, whatever the regulatory environment they live in. An intimate knowledge of the banking sector and of different financial institutions is extremely helpful in managing periods of tensions and stress on money and credit markets. Central banks have had to make almost instant judgments on the provision of liquidity in different forms and different maturities. There are circumstances where being able to assess the creditworthiness of market participants and the effective amplitude of their needs is of extreme help. More generally and somewhat academically, in times of crisis, the distinction between liquidity and solvency problems becomes both more important and much more difficult to make. And having, so to speak, all the cards in your hands minimizes the risk of making mistakes. Second lesson, as concerns the supervision infrastructure, it seems to me that clear, simple, robust, and pragmatic arrangements have performed better than more sophisticated and elaborate schemes. As you know, I had myself to face a situation of acute crisis and to make decisions in real time concerning a major and internationally active financial institution. At no time did I have the feeling that our current arrangements were deficient and prevented me from getting the necessary information and making the necessary decisions. As you also know, seen from a public interest perspective, we could solve the situation without any significant disturbance to capital markets. Nobody knows about the future, but I tend to come out from this episode with some confidence in the appropriateness of our current arrangements. In addition to central banks, governments in all countries have judged appropriate to act and try to restore financial stability through a broader set of policy actions. Initiatives have been taken, first, to recapitalize banks through infusion of public money, and second, to foster confidence in deposit guarantees. In a European framework, such actions involve mainly national decisions which have to be made, in many cases, with some urgency. Hence, the impression that at least initially the coordination may not have been perfect, but things are falling progressively into place, and I'm quite confident that any remaining issues will be quickly dealt with according to the roadmap and to the joint principles that have been recently adopted by ECOFIN ministers. So I would encourage all market participants to take a step back and, as Jean-Claude Trichet said, collect themselves to look at the whole package of measures which have been publicized. True, they have been announced through a succession of public statements, but taken together, they represent decisive steps and a coherent package towards restoring confidence. And I'm convinced that their impact on the real economy and future growth is going to be extremely significant. Overall, I think it's fair to say that the euro has passed the test and come strengthened out of the current difficulties. The euro system will keep fulfilling its primary mandates of price stability while also contributing to the broader objective of financial stability. Governments are increasing their cooperation, so the Eurozone has shown it is well equipped to live up to its responsibilities as a truly global player in the international monetary system of the 21st century. And I thank you very much for having given me this opportunity to present my views. Thank you.
Thank you very much, and thank you for this very clear statement of views on the current state of affairs and the priorities. Unsurprisingly, what you said is very consistent with what Lorenzo Bidis-Maggi said before this morning, but quite different from what Joachim Almunia and Dominique Strauss-Kahn said. Both put more emphasis on the need to reform governance, whereas yourself and Lorenzo Bidis-Maggi were putting more emphasis on implementing what has been already decided. We have time for some questions, so who would like to start? Fred?
Christian, I think you made an absolutely crucial point that needs to be underlined. When you said that a really very impressive set of measures has been undertaken, but they have not been presented as a very coherent or comprehensive package. And I think that's because they've happened so fast on so many specific issues in so many different countries. But aside from a few journalistic efforts, I don't think there's been any comprehensive presentation of the whole package that has been put together. And I think if that were done, including this weekend, when all the ministers and governors are together, it would really help in impressing the markets around the world that, as you said, a lot has been done. I just don't think it's realized, and it's partly because of the lack of presentation in an effective way. So I would really add that to the list of things to do over this weekend and going forward, so as to get credit for, in fact, what you all have done.
Well, I do agree with you, and I think that would be a good idea. Honestly speaking, if you look at what has been done in other monetary zones, including in the United States of America, which is a federal state with federal institutions, and even in the United Kingdom, where you have well, a unique government and a single central bank. Well, I'm not sure that all the measures taken during the last couple or 3 weeks have been presented or could be presented in a comprehensive way as a comprehensive package, simply because the events unfolded, decisions were taken by different authorities, even if they were in total coordination within their own responsibilities, and it has not come out in one day as a global package, but day after day, as soon as they had been prepared and ready. So I think we all have this problem of making a presentation of all what has been decided and done, either in each individual country or monetary zone, or globally in coordination in a comprehensive way, so that actors may realize that the world has changed, not only because the situation has worsened dramatically, but because the policy responses have been extremely strong.